Welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this finally sunny Tuesday. I hope you all had a great start into the new week. Unfortunately, yesterday's streams was plagued by some technical issues and issues with our ISP. Today, everything's working fine again, so we hopefully have another uninterrupted episode. Before we do that, however, as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And besides that, don't forget all the tools that I'm using in this live stream. So the charting software, the broker, the strategy I'm following, and so on is linked in the video description down below. And that's the one thing I always recommend. If you're here for the first time and you haven't checked it out, you can actually read the Elliott Wave principle online for free if you're using the link when you're using the link in the description down below. With that said, let's jump into it. We see today we have a slight green day or green start into the day. Our GameStop position is obviously still hugely in red. Against that position, we've been now for weeks selling covered call options. For the current week, we have $30 covered call options written against it, which basically is the strike price we got the shares assigned on. I don't think that we will see $30 this week, so they should expire worthless by Friday. Just a second, having some echo here. So that's about GameStop. Let's actually look on the charts and start with GameStop. So on the bigger picture, again, you can check out last week's episodes, for example, from Thursday. For a little bit more detail, but overall I expect that we're actually getting a push down into the $15 to $16 area, so which would mark the 78.6% retracement, the 100% expansion for a potential big corrective pattern like this, and also the 100% expansion for a smaller corrective pattern like that. If we look closer, so from the 8-hour chart, let's go to an hourly chart, we can with the naked eye see a 5-wave 1, 2, 3, 4, 5 impulse pattern down here, followed by a potential ABC that may or may not have finished here, or this here is only in some form part of the correction. So there is the chance that we still get a push up to, let's say, 21, maybe a little bit higher, if that correction here isn't finished yet. Otherwise, we are right now in the process of making our next 5-wave move downwards. Now, in theory, let's zoom out again a little bit, 4 hours. In theory, there is a very, very slim chance that this is actually the end of the correction, but in my opinion, we should get lower than where we were here. So to have basically impulsive wave, corrective wave, followed by another impulsive wave. Now, while we have 5 waves finished here, we fall short of reaching a new low. Therefore, I think this 5-wave move here is only the first wave of another 5-wave move, which would mean 1, 2, 3, 4, and then 5, and we reach our $15 to $16 mark down here. Obviously, that's bad for my pending positions. I've been thinking, so before we move on other stocks, I've been thinking if maybe, obviously I still have those calls that I would have to buy back. Yeah, let's just run the math. So markets open, so option prices are there. So we have for this Friday the $30 call. So if we say we buy back those calls, we anyway almost realize almost the maximum profit. So there's only basically $3 profit left for us to get, or actually less because the medium here is already free. So $2, so $10 overall profit that we could get more. But instead of selling those, I was thinking maybe selling either just longer dated calls for higher premium or leaps. So leaps would be at least a year out. So obviously I believe that based on the overall chart, that there is still much more upside. Yeah. So however, for that I anyway hold shares in ComputerShare. So it doesn't really matter that much. One shouldn't be too greedy. It's not like, oh, GameStop will go to whatever price and those 500 shares will make so much of a difference in my life if I get them called away at 30 compared to if I could sell them at, I don't know what higher price. Yeah. So the question is, in this portfolio, what's the smartest move. So if I were to buy back those calls here, and then anyway, the one option would be I just write new calls for next week, which obviously, if we look here, $30 calls for next week, premium isn't that high. So if I sell 5 of those, we can see that the net result of 5 of those, the net result would be an astonishing $10 credit. So not really $10 per share, so it should actually be $50 if I'm seeing that right, yeah. Which is not really great. I mean, it's $50 for a week, yeah, but still. Now, if instead of that, however, I said, if we say January 17, now again, I got those shares assigned at 30, so any price I sell them at 30 at actually already means for me profit. So if I sell them at 30, I sell the shares more or less break even, but additionally, I pocket all the premium that I pocketed in between. So if I, for example, say, okay, instead of dealing with the weekly writing of calls, where again, like for next week, we might be able to get $50. For the week after that, we might be able to get more. So obviously, if the volatility stays high enough and the price moves the way we need it to, then selling the weekly calls or covered calls is actually more profitable, offers a higher return, but also requires like more management. Whereas if I just sell the January calls, we can see I could pocket $1,000 in cash and premium. If GameStop goes above 30, which I strongly believe by January, then my shares get called away at 30. I still pocket those 1,000. Basically, I had the shares for plus minus zero, and in between still earned option premium. Yeah. Now, if I were to say, okay, I think, and again, I'm just gonna pick random numbers now. So I think GameStop goes to, let's say 36, yeah. So just for again, random number, yeah. And instead of selling the 30 call, I sell the 36 call. We can see that suddenly, I mean, on one hand, I would get $200 less in premium, so only $800 total compared to $1,000 right now. On the other hand, if GameStop indeed goes to 36, my shares get called away for $3,000 more. So $6 more per share times 500 shares, or actually more than that. Yeah, so let's do the math. So if we sell them for 36 times 500, then we sell them for 18,000, but we got them assigned at 15,000. Huh? No, wait, what? Yeah, like, okay. Maybe I'm not awake fully yet. Yeah, so it's $6 times 500. Like, what's so hard? $3,000 more. Sorry. Yeah. Because we obviously have 500 shares, not 1,000 shares. Yeah. Sorry. I mean, yeah, happens. So we make $3,000 more for giving up $200 in premium here. Now, on the other hand of the scale, what if we go crazy and say, okay, why not sell, like, let's pick the worst case or the maximum, let's say for January 27. It's like more than 2 years out. Yeah. We can see how high the premiums are. So if I sell a $35 strike price call option, we can see that it would be around $3,500 that I pocket now. Yeah? In which case, however, also if GameStop is above 35 in 27, I'd pocket another, again, $5 difference times 500 shares, so an extra $2,500 from those shares. However, it also means until the shares get called away, I'm locked in a position and I cannot really work or have, I mean, I could roll the position, but it usually would mean paying money since I can hardly roll it. I mean, I could roll it lower if the price falls for higher premium or so, which, yeah, wouldn't help much, but I could not roll it out. Yeah, so the question is now, what's the smartest play here? So I actually think that before January we'll see an upside, and which also then brings up the last option, obviously, because as the price potentially goes down, the premium that I can earn also goes down. Whereas on the other hand, if the price were to go up, and again, we need some strong movements to also increase the volatility, which has an effect on the premium. If the price were to have some strong upwards movement, then the premium that I would receive for a $40 or $50 covered call would also increase. So it's like Yeah, I'm really torn a little bit, like what's the smartest play here, because like on one hand it would be nice to do that, on the other hand, so I'm just gonna quickly do something on the other screen, just give me a second. What's the best play here for max return? Just a long call. Okay, so for example, on the other hand, I also would like to obviously have some cash that we can use in other positions. So as I mentioned multiple times already, I believe that Novavax still has a huge upside potential here, and that we are worst case gonna see a wave E move to make this a triangle as a final wave. And in the best case, we already finished the corrective pattern and actually in our way up into the $30 to $60 mark, unless I'm wrong, of course. So right now, the $20 call for January would be at $130 premium, but it also means that if we were to reach the $30 mark, it pays off $850. If we reach the $60 mark, it pays off almost $4,000. Obviously by expiration in January, if I'm right and it happens earlier, then it would pay off a little bit more in the lower price ranges. But yeah, so for example, if I get $1,000 in premium from writing longer dated covered calls against my GameStop shares that I have here, not the GameStop shares that I hold otherwise, then I could use that to buy a couple more calls here, which is obviously 100% risk business unless I close the position early, because right now we only have one single call here, and while that call already would pay out a little bit, yeah, if I'm right, getting another or maybe like 2 or 3 more would not be too bad in my opinion, yeah. Cost doesn't have options. I had just threw our strategy out. SunPower is, yeah, like we're too far off from trading anything here, yeah, or writing options here. Immersion, we don't have enough shares, so here we would need basically what, $600 to upgrade to a full $500 to upgrade to a full 100 shares, and even then the premium is, yeah, as we can see, where are we now, 985. So the premium for covered calls is non-existent unless we go out in, yeah, like to around, what's that, like 50, yeah, around 45 days, I think seems sweet. Maybe for GameStop, we also just have to pick the middle point, so which would be a set we can buy back the current $30 calls, buy them back 5 pieces, so we close them out. And instead of going for weekly, we go for roughly 45 days. So yeah, that would actually be exactly 45 days. Which would give us like $300 in premium. On the other hand, if we go longer than November 1st, so then anyway, we're in January. So if we go here instead of November to January, we'd get $1,000 in premium. $1,000 in premium buys us like more immersion shares. But then question is, again, if we go for 35, then we get $800 in premium. So we could actually, if we go for 36, so 160 times 5 is 500, so it's still $800 roughly in premium. And if we go for 37, 150, so that's 500 plus 250, 750. So if we do that, we have a potential profit on an upside. So if GameStop goes up before January, we profit up to $700 per option on top, so another 3,500 profit potential. And on the other hand, we pocket the premium here, which is again 155. So just to make it sure, 155 times 5, so 775, which we could use to get divided by 985. Yeah, easily get the 50 shares. actually get the 50 shares plus get another Novavax call. So although it means till January that the position is locked in, it's like, yeah, it's really frustrating choice to have, in my opinion. Yeah, I mean, obviously there are worse choices to have in life, but it's like, how is it? Damned if you do, damned if you don't. Yeah. So hindsight is 2020. It's like the being patient is a huge factor here. So again, while I expect it to go down, it actually would make sense to sell shorter term options, and ideally, I mean, theoretically, I could even sell $24 strike price where we risk paying back some premium. How much? Yeah, but I mean, if I do that for January, I would be an idiot. But if I go much closer, so if I go, let's say next Friday, and we go down to 24, yeah, then we get $100 for the week. So it's not really making a difference. If we go for this Friday, so if we roll for this Friday, okay, it's not worth the risk. So to get like $30 in premium, because if I'm wrong, that might actually happen. If we go for what was 45 days, November 1st. So if we go here for November 1st, but I cannot go for November 1st for the $24 strike price, because that obviously is like the point where maybe it takes us that long to reach the bottom, but if not, then we're already higher, and I actually give $3,000 in premiums away. So definitely not a smart move. So what's left is basically to keep selling the weeklies. Yeah, unfortunately. So we'll just have to. Yeah, I mean, it pays us $50. So actually not even that, $40 until next week. But I expect it to go down, which means we would get less premium if we wait even longer, because there's less time and the price might be lower. So we'll go with that, and basically, so I have to cancel this position, and then we can go with that, and we are unable by September 20, $30 calls. Yeah, so that should be no issue whatsoever, since it's basically what we have right now. Yeah, and then sell. Oh yeah, that's the issue here. That needs to be 1. No, I didn't want to add it to what. Yeah. Okay, so that should be, or actually vice versa. So if we set this here to 1, and then here the quantity to 5, so now we have it. So, and that's gonna be, no, this needs to be 1. Here quantity 5, and in the meantime we're already losing money. Yeah? So anyway, let's go for that. We get some money for next week, and yeah. Let's actually see if we can get that for $10. So, and just leave it open. Well, I'd have to do it individually to make it easier, so that it doesn't try to fill both at the same time. Let's actually do that. So first we buy back our 5 for $15 if we can. Yeah, well, let's do it for 16. So okay, we closed out that, and now on the other hand, the set we go for next week's, and we just again sell the $30. So sell, quantity is 5, and here we go for the ask, put till canceled, and submit. Now that would be 60 minus what we just paid. So, or we just go for the bid and we give $5 up, and it's done. Yeah. So now we have for next week 5 $30 covered calls, and yeah, got an astonishing $36 in cash, like, which helps us exactly nothing. We could, do we have anything really cheap to buy? No. what we could buy NEO, yeah, but I mean, I think long term it will pay off, but obviously it would be nice to accumulate a little bit more cash, so we're not going to buy anything with that. Now, to work our way through the rest of the teams, so I said in GameStop, I still expect that we'll get the push down, that will finish the correction, and then we get our upwards development. Now, theoretically, that push down could drag out further as so often, but I don't want to gamble on it, so that's why I'll just keep taking little premiums, although one has to say like $50 for a week or so is also not that bad. It's basically, if we consider the original portfolio size that I had when I moved to Interactive Broker of around a little bit more than 10,000 euro. So 1% is like 100 euros. So $50 is 0.5% for a week. So it's definitely not that bad. Anyway, let's look. Barnes & Noble. Yeah, we're getting more signs. Basically, yeah, check out yesterday's episode. As buggy as it was, we covered the whole pattern here in relatively enough detail, but as far as like how far could we go further down, what are the signs that we're technically finished or potentially finished with the correction and so on. Immersion. Yeah, same thing. I mean, we're on a daily chart. We are waiting for either the confirmation with a push up that we're indeed finished with that ABC correction. So immersion actually, I think, is a good entry right now. But again, do your own research. Don't bet your house because I say it's a good entry. It's just my opinion. No, we are waiting for the break to the bottom, but on the weekly chart, that probably will not load right now. It's going to take months for it to happen, but I think there's more downside there and that we probably will be able to enter here for 5 cents a share or so in the future. Cause, yeah, like there we're still in a waiting position. Either this is some weird diagonal or we're still in a corrective move and we will get another push down, in which case the $5 mark would be, yeah, the next thing or the next potential turnaround point at which we probably would consider increasing our position if we have extra funds. NEO asset, there we actually had our breakout there. So we see, oh, there we went a little higher. That's interesting. I think we'll get to 585. So from the, no, actually, so we broke through here, although we had the signs of a corrective move. Maybe that's a flat correction, so that might still hold true. In which case our price targets now for this wave would actually be here, 674, 697. So that would be the next target area for NEO in my opinion, because we have what looks like wave 1, 2, and the wave 3 target, we broke through this one, we broke through this one, we haven't reached this one. However, in that sub wave that makes up the third wave, we have 1, 2, and we bounced at this one, which gives us 1, 2, 3, 4, and we're now in wave 5, and the wave 5 target areas from here to here, and the overlap is basically this. So the next target area to finish this 1, 2, 3 is 674 to 696 in my opinion, from which point we will then get a wave 4 and then we will get a fifth wave push even higher. So yeah, so there the few shares that we're holding, the astonishing, what do we have in NEO, 20 shares that we're holding should actually move further and profit over the next couple of weeks. Yeah, Novavax, as said, either this triangle pattern or either we get a push down to make this a nice triangle pattern before we go up, or we're already done here with the correction and we're going up from here. Either way, we'll have to wait and see a little bit to see which is the case and to then determine the profit or the smaller profit targets or interim profit targets. The overall profit target, if I'm right, is set between 30 and 60 over the next couple of months. Yeah, maybe, yeah, I don't know. Yeah, couple of months, yeah, actually, so. Nvidia, yeah, strong signs that this is indeed 1, 2, 3, 4, and we get now wave 5, so we should go up a little bit more, like what's that, 1%, 2%, to finish that before we get the next small corrective pattern and then get another 5 wave impulse up. So Nvidia on track for the next all-time high. SMCI. They are also, I mean, we're still waiting. It's a 3-day chart right now. There is a chance, considering all the overlapping target areas, that this is actually the end of the corrective pattern. It's obviously a high risk investment, considering the accusations or reports by Hindenburg Research. But yeah, like from Elliott Wave perspective, there is a decent chance that this, in my opinion, marks the bottom and that we will get to see the next 5-wave move upwards that eventually should make a new high. So it offers like 200% potential, but the risk obviously is also not that clear defined, because if the correction is not done, then this will turn out as 1, 2, 3, 4, 5 ABC, and then we go further even. So I mean, not that far maybe, but you get the idea. So yeah, it's a nice pattern, but it doesn't offer a super clear risk reward ratio. Yeah. There, Wheeler Real Estate. Oh, nice. See, we had the assumption that this might be the corrective pattern, and we bounced exactly at the ABC, at the 100% expansion line. So making this the end of the correction, especially if we manage to go higher than 1244. So, and then this potentially the next 5-wave move up. So it should right now actually have another 50% upside here. So at least to the $15 mark. Making this basically wave 1, the correction here that almost exactly retraces 50% wave 2, and brings us now into either a third wave, or it's a big A, B, C playing out. Either way, quite some upside still here from a technical perspective. Yeah. So, and now SPY played out the way we thought it would. So when that part here was developing, we got the idea that this might be the entire correction, and we have our 1, 2, 3, 4, and we reached the minimum target for wave 5. But looking at this, I think this is 1, 2, 3 in progress, 4, 5. So might this time actually exceed our wave 5 target area, so of 574. But yeah, we're already in the area where we are technically could have finished our wave 5, but looking at this here, this doesn't seem like it could be wave 3, 4, and 5 in one go. So I think this is 3, maybe still not finished. We get a wave 4, and then we get a wave 5 push. So yeah, still some upside here. Then we would get another, because that would then finish 1, 2, 3, 4, 5, and then we would get another correction. So while there's still a bit of upside, it might be, like the easier play to wait for the turnaround. So try to label that subwave and then play put options or go short. Nvidia probably similar. Yeah, like, I mean, not as, no, actually similar. So 1, 2, 3, 4, and now we're in wave 5. We're already in the target area that we need for the wave 5 overall. This wave 5 will not make a new high from the looks of it, but it will be 1, 2, 3, 4, 5. And with that, finish that wave 5, we get a correction, and then we see further movement up. Yeah, so that's about Nvidia. And then we have the Nasdaq left, last but not least. That also is going to be moving very, very similar. Yeah, so even here with the naked eye, 1, 2, 3, maybe finished. I don't think so. 4, and then 5. And we can see our target areas are here. While they are not sufficient to make a new all-time high yet, after that, same thing, 1, 2, 3, 4, 5. And then we get another correction, and then we get the next push up into our new all-time high. Yeah, so we'll just have to be patient here, I guess. Makes me kind of miss the times of trading the Nasdaq on eToro with 20 times leverage. Yeah, I might deposit a little money to do that again. So because it's exactly a situation, I mean, if you get it wrong, it hurts, obviously. So that's the other side of the coin, that the human mind likes to forget. But like entering here after we see this here develop, yeah, I mean, obviously not with your house and your boat and whatnot, yeah, but would have paid off nicely. I mean, it's like a 2,000 point move. Yeah. Entering, I probably would have entered here, to be honest, based on this pattern, and then but stop loss would have need to be here, so it still would have turned out there. Maybe I'll deposit a little money again to also be able to play the higher risk trades. Anyway, yeah, so there we also said 1, 2, 3, 4, 5 should reach our target area, then we get a next correction pattern, and then we go up further. Sorry, yeah, so that's how I see it right now. And I guess with that, I will call it a day, and we'll enjoy the rest of my coffee before I get some other work done. Thanks for tuning in. Don't forget, like, subscribe, enable notifications so you don't miss out next or future episodes. And then, yeah, see you in one of my